Wow, it has been a killer year for superannuation funds, as 8 funds delivered returns in excess of 20% during the last financial year. A booming share market helped the $3 trillion sector post its strongest returns in more than 2 decades. Top performer was MindSuper's Growth Fund, with a return of 22.6% to their members. MindSuper Chief Investment Officer Seamus Collins said the fund owed its impressive numbers to a decision to boost its exposure to the share market in the early stages of the pandemic. I would like to highlight the fact that it would not have been easy to call a decision like that, after the share market collapsed and the main emotion in the market was outright panic. To then stay cool and follow the numbers, ignoring sentiment and emotion, is not easy, but it made their members a truckload of money. If we have a more in-depth look at the top 8 of last financial year and we cross-reference this with the average performance of the past 10 years, we find 3 super funds out of the top 8 of last financial year that also made the top 8 of the past 10-year average. From those 3, Host Plus Balanced scored best with a 21.3% growth last year and a market-leading average of 9.7% over the past 10 years. Australian Super Balanced with 20.5% last year and 9.7% 10-year average, and Sun Super Balanced with 20.7% last year and 9.1% 10-year average are the other 2 great performers. Will those crazy growth numbers continue this financial year? No, that's not expected at all. Keep in mind that the markets crashed pretty bad prior to last financial year, so there was something to make up for also. So given that we won't be seeing that same growth repeated, I would like to invite you to look at the future. Will your money be best placed in an industrial super fund, or is it time to capitalize and explore alternatives? I don't know the answer to that question for you. I suggest you speak to your financial advisor. If you want to know more about finance in the self-managed super fund, reach out via the below link and have the conversation with us.